But what I found when I got into the business 15 years ago, and what is true today, is that it is still, and I don't want to say it's a mom and pop business, but contrary and compared to the other commercial real estate asset classes where the REITs have a significant hold or percentage of ownership, self-storage is a fairly young industry, and that only 10% is owned by the national REITs. And so that leaves the rest, the other 90% of all the facilities out there across the country are owned by some regional players and maybe even some national players that aren't REITs, but then it becomes local. They're local owners that buy and or build facilities from the ground up, and they own one or maybe two or three. So that in itself, to answer your question, Dwayne, there's still a lot of opportunity for people to go out and buy an existing facility.
Welcome to the Wealth Through Real Estate Investing Podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and to reach the lifestyle you always wanted. And now, your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke, and today we have Scott Myers. Scott is the nation's leading expert in the self-storage investing industry. Scott, thank you so much for joining us on the show, and how you doing, my friend?
I am doing well, Dwayne. It's a pleasure to be here. How are you?
Really looking forward to, I've been hearing your name for a very long time. You're like one of the early, I would say, gurus, experts in the self-storage industry for a long time, very well known. I know that you coach hundreds of students and big time investor yourself. So I'm really pleasure to bring you on, especially learn a little bit more about this niche, as we hear a lot about apartments, commercial real estate. I know this is kind of I would say a little bit under the radar type of investment where not many people are really talking about it, but it's starting to get mainstream. But before we get kind of talking into that, would you mind talking about your background, how you got started in real estate?
Sure. So I think like many folks, I started with single family homes, bought a home study system in 1993 and began buying fix up single family homes in a working class neighborhood, 3-bedroom, 1-bath, bread and butter ranch houses in affordable neighborhoods. And we'd rehab them and then refinance them and rent them out. So the BRRRR method. And then we're offering up on lease to own. Our intention was to really sell those within a year or so, but then we found out that not many people had the ability to, and a renter is a renter. And so we found ourselves getting those properties back after doing extensive rehabs on them to ultimately sell and putting them in there as buyers. And then to realize very quickly that I didn't like being in the tenant toilet business, but there wasn't a way. I wasn't seeing the cash flow in the time that many of the gurus had stated in that side of the business. And so I thought, well, economies of scale will fix this. And so I started buying apartment complexes. And so we had about 80 houses and about 400 apartment units. And all they did was really kind of compound our problems. I think it's tough you really need to get to a critical mass where you can have really solid property management companies and, built up cash flow for a while before you get to that place where it's not a very active business. So I thought, for all the reasons we love real estate, appreciation, depreciation, leverage, we can borrow money to buy them, and, all the tax advantages. There's nothing better than that if it weren't for the tenants and toilets and the trash. And so in real estate, if I went to stay in that route, then I'm left with parking lots and self-storage. And so, there's not a lot that you can do to increase the value of a parking lot, and you just, plain buy it right. But with self-storage, it is similar to multifamily and other forms of commercial where you can add ancillary income streams and you can really, push the value and drive the NOI. And so I began looking into self-storage and, absolutely saw the light. And what I love about it is all the things that I didn't like about the tenant side of the business. If people don't pay in self-storage, we lock them out and then we sell their stuff off. And when they move out, or even if we have to sell their stuff, what I'm left with is a metal box on a concrete slab, and you just sweep it out or use an electric or a gas blower and blow it out and move in the next person waiting in line. And so, really many, if not all the benefits of real estate, but without all the hassles of the tenant, toilet, and trash business. And so sold all our houses and apartments and have been full bore into self-storage for the past 15 years. And then along the way, as you mentioned, we formed an education company back in 2007. And so we teach people how to invest in self-storage as well. And teach exactly what we do, which is we buy existing facilities, we develop them from the ground up. We do conversions of old big box warehouses, industrial buildings, and convert them into self-storage. And then we have, in the past 5 to 6 years, we've syndicated a number of projects all across the country, which has really exploded our growth. So we are welcome to talk in all facets of the self-storage business, and we absolutely love it.
Yeah, there's definitely one thing that you've been doing it for 15 years, syndicating for 5, 6 years, and it seems that it's starting to get some type of headway as far as kind of leaking into the mainstream conversation, as far as kind of like
Hmm.
go-to investments. Of course, naturally, people think apartments and
Hmm.
and commercial real estate, office buildings, but self-storage, they just can't wrap their mind around that. And then recently in the news, I think it was probably in October, BlackStone, one of the largest institutional investors,
Hmm.
bought Simply Self Storage for I think $1.2 billion. So if you're starting to see now kind of larger and institutional investors get in there, that there's probably definitely something there. Can you kind of talk
Hmm.
about with stories like that? Is there room for individual investors to get into the game and take advantage of these types of investments?
Yeah, so absolutely there is, and certainly we've seen a lot of attention. So self storage is no longer the stepchild, the ugly stepchild of the commercial real estate industry, and for good reason. First of all, it's a really large industry. So yes, there's a lot of mom and pop facilities out there across the landscape. There's we're approaching, I don't know, I can't remember how many thousands of facilities now in terms of development. I think at last count it was 58,700 and some. And so I don't know where we're at now. And that's all the ones that are actually counted, sometimes just by the big boys. But what I found when I got into the business 15 years ago, and what is true today, is that it is still, and I don't want to say it's a mom and pop business, but contrary and compared to the other commercial real estate asset classes where the REITs have a significant hold or percentage of ownership, self storage is a fairly young industry, and that only 10% is owned by the national REITs, and
Mm,
so that leaves the rest, the other 90% of all the facilities out there across the country, are owned by some regional players and maybe even some national players that aren't REITs, but then it becomes local. They're local owners that buy and or build facilities from the ground up, and they own one or maybe two or three. So that in itself, to answer your question, Dwayne, there's still a lot of opportunity for people to go out and buy an existing facility, and the business model is not, it's not an easy business. No business is, but it's a simple, predictable business model for somebody to go out and develop one or convert one as well. But the fact that there's 90% is ripe for consolidation. That is why we're seeing a lot of investor money come into national money, REITs, hedge funds coming into self storage, because it is not only because it's ripe for it, but because the asset class does so well during a downturn in an economy as well as during good times. It has the lowest loan default rate of all commercial real estate. And so any bankers or hedge funds investors, they first of all, they want their money back and they want a
mhm.
return. And when you're looking at this asset class that is so profitable and it has the lowest loan default rate, and for many other reasons, it is now it is not only this gone from being the commercial real estate to now the darling of Wall Street for these hedge funds and the REITs that are just doing extremely well, especially during the pandemic, which is, we're in the trauma and transition business. When there's trauma and transition,
Hmm.
there's a rush to storage, and we have benefited greatly from the events of what's happened in 2020.
Yeah, that's definitely, I think, the biggest thing that I've been talking to a lot of my partners and investors, that they're trying to find. Of course, you can't predict what the future is going to hold, but kind of things that are less prone to the whims of the market. And of course, we're going
Hmm.
through a transition. We're going through a pandemic. People are kind of still want to invest, want to protect their capital, and move forward there.
Hmm.
So for the investors, since we're convinced now that definitely self storage is definitely an asset type that we should be looking at seriously. Can you kind of talk about you teaching hundreds of students each year,
Hmm.
the common mistakes that most new investors get into when investing in self storage?
Hmm. Yeah, perhaps a product of my own doing. We are the original education company teaching people how to go about doing this for the past 15 years, and talking about how it is, a simple, predictable business model. Again, with that caveat, nothing happens and no business is easy. It's not a set it and forget it or take your mind off it. But what we've seen compared to the tenant toilet trash business and apartments is that yeah, there's markers and there's norms, and we can step into a facility and into a market and know pretty much just what we're expecting in terms of an outcome
Mm,
and the returns. And so as we're teaching people, what are the mistakes that they make, right? What we see them make is many times they flat out don't underwrite these things. They don't do the due diligence. They accept the broker's numbers because they work for one of the big firms, and they accept the seller's numbers because the seller sounds like a nice guy or a gal, and they don't do their own due diligence. And many times they just don't educate themselves and what due diligence they need to be looking at. They can look at a P&L and assume that it includes everything that is a line item income or expense item of that facility. But just because the broker or the seller doesn't give it to you doesn't mean that it isn't an expense. And so that, and then the nuances of it, and then also the fact that, yes, it is much easier to manage than people, because it's just, people put their stuff in there and then they go away and they pay us. So we don't have to manage people, but it doesn't mean that you don't walk the four corners of your investment, of your business on a regular business basis, and make sure that you're changing your marketing quarterly, and you're driving revenue, and then you're driving occupancy the next quarter. And, what is it going to take in your particular market to get the phone ringing, get the door swings, get people on your website, and then having the automation and the follow-up in place, because self-storage is really, as you know, Dwayne, it's a commodity. It's people aren't going to shop the school system, for their storage unit. They do that for apartments and houses.
True.
But you've got to be able to have a great, clean website, a great message, and then a way to capture them. If somebody's looking on their phone, on their laptop, or calling in, we got to capture them, and we got to get their attention. We got to get the reservation, or at least make an appointment to have them come into the store, or to be able to rent a unit online, and the ability to do so. So that's a kind of a broad brush stroke. The opposite of that is what people don't do is they don't learn the business. They don't know how to underwrite. They don't know how to manage it. They assume it's easy, and then they set it and forget it. And then they wonder why their occupancy goes down and the value goes down.
And one thing also kind of, I know we can kind of, dig into that discussion for a very long time. There's so many different topics around that. But one thing that's very exciting about the business, as I start to learn a little bit more, is about kind of adding value. I know with apartment buildings, you can, raise the rents, you can, lower the expenses and things like that. But I know with particularly self-storage, there's a lot of different things that you can do with it. Can you kind of run this through a few things on adding value to make this business really increase in value?
Yeah, and the greatest opportunity that we see is truly the fact that what we just touched on is that there are many mom and pop owners and investors that have really fallen behind on the times, and in many cases they aren't minding their store. They're making money and it's doing well, but they don't realize that because they haven't raised rents in 9 years, because they just want to stay full, they missed out on all kinds of value in their facility, because they haven't adopted technology and put up a website for people to reserve a unit or rent a unit online. They're having to pay either themselves in terms of trading their hours for the time to manage it, or they're paying somebody full time to sit in the facility. When somebody happens to walk through the door, there's not a lot of traffic coming into a self-storage facility, perhaps with the larger ones or with those ancillary income streams that you mentioned. But outside of that, you don't have to have somebody there the entire time. So that's one of them. They've fallen behind the times in selling locks, boxes, and moving supplies, and then also realizing that we don't take a deposit. There's almost no need for a deposit. That's for habitational real estate, because they're not going to damage our steel unit, and there's really no need. So we have the lien laws to protect us if they don't pay. So we charge a non-refundable admin fee, $19, and anytime we go into a facility, if they don't have that, we automatically add it. Renter's insurance, tenant insurance, that is an add-on at the point of sale. Again, locks, boxes, and moving supplies. We can offer eBay services where we can sell them for them if we do have a manager behind the counter, and a drop ship business as well for the folks that are big eBay and Amazon folks. At our facilities that have boat and RV service, we have propane filling stations, we have concierge detailing services if they want, and dump stations. There's over 40 different profit centers that you can add to a self-storage facility that we've identified to drive the income, and in many cases, like technology, then also reduce their expenses. So, we have the ability to really drive NOI at a self-storage facility, unlike any other type of real estate asset class that we've seen. And that's what we do as we head into a facility, is to determine just exactly where we can take it by adding on all those and reducing the management overhead by using technology.
Wow. Yeah, I love that a lot. Yeah, just like this is the thing about 40 different possible
Hmm.
Revenue drivers right there is amazing. Can you talk about? I know that there's multiple ways to kind of learn the business. You
Hmm.
have educational courses, mentorship, and of course, can
Hmm.
kind of get involved with you through syndication. Can you kind of talk about some of the stuff that you work with investors and
Hmm.
students with?
Sure, sure. So, when I started in the business, there wasn't an organization like ours. There wasn't a Scott Myers teaching people how to go about doing this. And so I started by going to the trade shows from the Self Storage Association and the others, and really just talking to some people to begin with. But that, you're not going to get all the information, and that information is free. And we all know what the value of that is. And so, by paying consultants, lots of money in the beginning stages, and then also learning through the School of Hard Knocks, and working with a whole lot of other attorneys and property management companies. We learned a little bit over the years. And as I was running the Central Indiana Real Estate Investors Association, it's the largest real estate group here in Indianapolis. People began asking about self-storage, and so we created several workshops and other materials and resources. And then some of the national speakers bureaus began calling and wanting me to go out and speak and teach more. And so that meant we created more resources, and then that led to a home study system, and then commercially releasing the software that we use for evaluating and underwriting our facilities. And then we began holding live events. And then that led to mentoring, really with an eye towards then partnering with those folks that were really serious. As you know, Dwayne, your time is valuable, and so is mine, and ours. And so, for the top people that were really looking to be serious about this, then we would come alongside of them and set up the business with them. And then when they would go find products and analyze them, the way that we had taught them how to, then they would bring them in and potentially have an opportunity to partner with us. And we would bring, in some case, some of the guarantor side of the lending, as well as our private equity and management, and just being in the deal and utilizing our best practices and what we've learned over the years in terms of our value and equity injection into a project. So, and then again, everything in between. The ultimate goal, as we joke around here, is total self-storage world domination. And all that means is, we don't want any project, if it truly is a deal, an opportunity that comes in, if we turn out that it's a deal, if it's something that we don't buy or it doesn't fit in our wheelhouse, we want somebody in our community to have that. It should not fall off our desk. It should not fall out of our community, because it's a very large and wide market, but very small at the same time. And so that's the community that we built, is that we really truly want to be able to, when an opportunity arises, that we have the ability to transact on it.
Yeah, I love that a lot. And we'll make sure to have all of those links and things like that so everyone can get to. I understand you have a
Mhm.
website and phone number, things
Mhm.
like that. We'll make sure to have that as well. Just
Perfect.
kind of learn a little bit more about you. I know we talked a little bit
Mhm.
before we started recording that you're, from out in Indiana.
Mhm.
But can you take us through a typical work day for you? And do you have any special morning routines?
The morning routine started when my first child was born 20 years ago now, and that is I moved my workout schedule from whenever it could happen in the afternoon to now 5 o'clock when the gym opens. And so I get up in the morning, have my first cup of coffee before I get to the gym, walk around the neighborhood a little bit, get moving, and work out, and then I land at my desk. Usually by 7 o'clock. I'm usually reading something spiritual at that time, and then I'm starting work at about 7:30. Lunch every day, at least since March, with the family and whoever is
Mm-hmm.
here. And then I shut it off at 5 o'clock. Big fan of Dan Sullivan and the strategic coach, and set some habits in place a long time ago that, I take lunch with whoever I can with the family, shut it down at 5 o'clock, as well as on weekends, and everything else can wait after that. So that's kind of the morning and I guess the daily work routine.
Awesome. And then are you using any particular tools or resources that help you kind of manage your day?
Yeah, just everything goes in the calendar within Google Calendar, and I think I utilize it a little bit differently. It is my to-do list, as well as my calendar, and then all the video. We're on Teams, Microsoft Teams. We're really digging into that a little bit more and using that side, but Zoom is still the go-to. So those are probably the main tools that we use at this point.
Awesome. And we can say with all your success, you have a great story or great origin story. And I know a lot of people's going to get a lot of insights from this interview. What can you say that you're most grateful for?
I'd say I'm most grateful for the mentors who taught me along the way, and the fact that we have the ability to not only teach people and be able to change their lives. And we've seen that through the lifestyle that self storage brings, but we made a commitment many years ago, my wife and I, that this is our missions platform as well, and that is teaching people, helping them to do this, but then also giving back by way of building houses. We take our friends, our family, coworkers, partners, students on mission trips, and we go twice a year, and we build two houses each time down in Mexico, and we give those houses away, and we fund the house, and we also fund the trips for those that we take along with us. All they have to do is get to the airport in San Diego, and
Mm.
then we take them across the border. We pay for their food, their hotels, and again for the house and the entire trip for them to not only participate in that, but then just to have their own experience in a short-term, family-friendly mission trip to then pay it forward, hopefully, or it is not ours to dictate the experience that they will have, but just to introduce them to the mission field. And we've been able to build about 4 houses a year for the past several. This year, a little monkey wrench in spring, but week of Thanksgiving, we were able to build one more house, and then we're on for spring of next year as well.
Wow, awesome. Yeah, it's great. You guys giving back. So really appreciate you sharing that. And we'll make sure to have the contact information, but can you kind of share that for the audience who are listening to it?
Sure. So passivestorageinvesting.com is our website where you can find out anything about what we do on the passive side. And also, there's a link to our mission work there as well for those that are interested in learning a little bit more about that. And then for those that are looking to learn about self-storage, to be an active investor, selfstorageinvesting.com is the place you go to. And both of those have a free PDF, a pull down about how to avoid the mistakes that beginning passive and active investors make and how to avoid them.
Awesome. Scott, it was really a pleasure to speak with. I know we can go really super deep
Mhm.
in this topic, but like I said, a pleasure for you to kind of give us a broad overview and kind of give us a nice introduction to the self-storage business. Scott, have a great rest of the year. Best of you and the family, and look forward to connecting with again soon.
All right. Thanks, Dwayne. My pleasure. Talk to you soon.
Take care, my friend.